Hey guys, welcome back to the Road to Retirement series. This is the January edition, and I've made a couple of changes this month that include totally selling out of one portfolio. I've changed some contributions to one of our pensions, and I'll talk about all of that in this video. If you're new to the channel, what I do is walk you through my entire investment portfolio. That includes pensions, stocks and shares ISAs, general investment accounts, crypto, absolutely everything. I'll walk you through how everything's been performing month to month, any changes that I've made or changes to strategy, and anything I'm learning along the way, because I am still somewhat new to investing. I've still got a bit of a runway ahead where I'm probably going to make lots of mistakes, but hopefully I'll share them with you and we can all learn together. So the biggest change I made this month is I've totally sold out my Vanguard general account. I should probably give a bit of context why I've got general investment accounts, because these are taxable accounts, which means you pay on capital gains and any dividends you make in these accounts. So I was investing very heavily after the whole COVID situation, where stocks absolutely tanked. So I was maxing out my stocks and shares ISA, putting in that £20,000 limit, but I also had extra cash that I've just saved up over the years. I found that a lot of the stocks in the market were still undervalued. So within the Vanguard GIA, I had the S&P 500, and in my free trade, I've got some of the big cap tech stocks like Meta, Google, and Amazon. And I thought, you know what, even though these are going to be taxable accounts, I'm sure I'm going to make good gains in them. So that's the context of why I had those investment accounts. Just to show you guys what I did, so I totally sold out of the S&P 500 in my Vanguard general account. That was the value of just around £18,132. I think the profit was around £5,600, which is obviously higher than the £3,000 capital gains limit we have this tax year, although I have tried to offset some of that by selling some other stocks, which I'll touch on in just a little bit. What I tried to do is counteract some of that capital gains by selling some stocks in my free trade general investment account. So if you come down to the recent activity, you can see I sold 3 stocks. One was Enphase Energy, the other was Intel, and the third was Neo. And I was all down on these positions in this portfolio. So I sold them and I took a loss of around, I think, £1,500 on this, which will offset some of that capital gains from the Vanguard general account. Obviously, that's still going to be over that £3,000 limit, but it's going to win-win because I get to use the capital gains allowance, and I've sold some of the lower conviction stocks I had in this GIA. So that's the way I tackled it. Let me know what you guys think, if that was the right approach. Happy to hear your comments in the comment section below. So that is why you will see my Vanguard GIA as now showing as 0, and it will be for the foreseeable future. I'm likely to close this account down. Taking a look at some of my other investments, let's take a look at my pension. So last month my pension was £148,032. It's gone up to £153,403, which is a 4% increase, and total unrealized gains of £47,427. You are probably wondering what I did with the £18,000 from my GIA. I was tempted to lump sum it into my pension because I'd get that 40% tax relief, which would be great. However, my pension is on a salary sacrifice scheme, which means that pension payment gets taken out of gross income. So instead of lump summing it, what I've done is increase my pension contributions. And the benefit is that I get the savings on national insurance, which is 2%. Instead of getting the 40% tax relief, I'm actually going to get 42% going forward. If you weren't already aware, for my workplace pension, I was contributing 6% and my employer was contributing 12%, which is obviously quite generous. So I've now upped my personal contribution to 12%, and my employer still matches 12%. So that's 24% of my salary that will go into my pension, which is obviously great because I'll get that amazing tax relief. And obviously the pension is one of the most tax efficient wrappers we have in the UK. Next up, we have my spouse's pension. So it was £19,572, and that increased to £20,546. So that's a 5% increase month on month, and the unrealized gains are £3,489. Another option was to put some of that extra money in my spouse's pension. However, as a basic rate taxpayer, she only gets 20% tax relief on pension contributions, so it just didn't make sense to put it in my spouse's pension. Next up, we have the free trade ISA. So last month, the value of that was 242,804. That's increased to 253,672, which is a 4% increase. I've got unrealized gains in this account of 178,674. If you've not seen my last video and you think, how the hell do I have such a large amount of unrealized gains? The answer really is a couple of good stocks. Well, actually one stock, which is Palantir. So I bought this very heavily when it was cheap. It was, a high risk strategy, but that has paid off. So my biggest position in the ISA is actually Palantir, which is basically £150,000, and that's up 615%. I think most people agree that the pension is the most tax efficient wrapper. However, I try to strike a balance between my pension and my ISA because I just don't know what the government are going to do. I guess the other benefit of the ISA is you can pull this money out at any time you want. And if you're able to outperform the market quite significantly, like I have done, then all of your gains will be tax free. So yeah, I've got quite lucky with Palantir. And I continue to invest in my ISA and maximize that every single year. If you want to see a deep dive of my ISA, I've got a separate video series, so please check that out. And if you're not subscribed to the channel, please do hit the notification bell so you get notifications every time I upload a video. Next up, we have my spouse's Vanguard ISA. So last month, the value of that was 22,440. That's now increased to 23,212. That's a 3% increase. And unrealized gains of £3,050. We are no longer adding more to this position, as in this tax year we've moved to trading 212. So any gains you'll see is just a result of the Vanguard All Index Fund just going up in share price. Talking about the trading 2-1 ISA, that went from 2,663 to 6,820. That's a 61% increase and an unrealized gain of £320. The reason for the increase is I took £4,000 that the gains I took from the Vanguard GIA and put it straight into my spouse's ISA. That's a benefit of being married. You get to use both your ISA accounts. That's a total of £40,000, £20,000 each. We're hoping to maximize the ISA for this tax year, but we have other expenses and other things we want to do. Also, we're really trying to grow our wealth, but at the same time, it's good to kind of enjoy life. So we're planning on a few quite nice holidays this year. So, sometimes you've got to balance saving with actually enjoying life as well. Next up, we have the free trade GIA, which we talked about earlier. So that went up from 20,283 to 22,408. So that's a 9% increase and an unrealized gain of £10,207. Next up, we have the shares I have with my workplace. So that went from 17,597 to 20,309. So that's a nice 13% increase and an unrealized gain of 10,287. For personal reasons, I obviously won't mention what company I work for, but as you can see, their stock performed quite well, but it is sort of volatile. I do get discount on my work shares, and that's the reason I kind of go for it. Obviously, any gains I make from that is also taxable, which I'm bearing in mind. However, given the discount I get, I'm happy to kind of just keep investing, and overall, it's still a small percentage of my overall portfolio. Lastly is crypto. So my crypto portfolio is pretty much 90% Bitcoin, 10% Ethereum, and the value of this was 15,744. That increased to 17,433, which is a 10% increase, and an unrealized gain of £13,289. I know a lot of people are bullish on crypto, but for me, I rather invest in companies I can understand or index funds, but I do kind of speculate. So I've bought as much crypto as I'm probably ever going to buy. So it's just going to sit there. And if in 20 years it kind of goes to the moon, great, that's a bonus. And if it totally goes to nothing, again, it's not going to affect my retirement in any significant way. So my overall portfolio went from basically 507,000 to 517, which is a 2% increase and a unrealized gains of £266,743. When I take a step back and think a 2% increase in this portfolio is £10,000, It's why you really want to start investing early on, put as much as you can, try and get to that £200,000 range, and then you can see compound interest really kick in. So yeah, I think for me the snowball effect has definitely kicked in, and hoping to keep that going to push for a early retirement. And what I've also started doing is tracking my unrealized gains. So I'm tracking that on the row below, and I've also represented that on the diagram on the right hand side, just to see how, as my portfolio grows, how does that relate to the unrealized gains. And more data is always good. So that's going to conclude it for this month's update. Obviously made a few changes there. The market's been doing very, very well for the past year and a half. Everything's going up and to the right, which is why these numbers look so great. However, if there's any uncertainty in the market, especially with the political situation going in on America, I'd expect to see dips in this portfolio, which is absolutely fine. And actually, it's something I want because buying great stocks at lower prices is what it's all about. So, yeah, if there are dips, I'm ready to buy good quality stocks. But that's all for this month's update. I'll catch you in the next month's update video.